Over the years, it has been commonly observed that the performance of most cryptocurrencies is closely tied to Bitcoin. When Bitcoin's value rises, altcoins tend to follow suit, and when Bitcoin experiences a decline, altcoins usually suffer even more. However, recent data suggests that Bitcoin may be decoupling from the rest of the market, deviating from this typical pattern. This article explores this phenomenon and its potential implications for the cryptocurrency ecosystem. The correlation between Bitcoin and Ethereum. One of the most apparent ways to examine the decoupling of Bitcoin from the rest of the market is by analyzing the correlation between Bitcoin and the second largest cryptocurrency, Ethereum. Recent data reveals that the traditionally high correlation between these two assets has reached its second weakest point in the last 18 months. The only time it was lower was in September 2022, following the Ethereum merge. Factors influencing Bitcoin's decoupling. Several factors may contribute to the decoupling of Bitcoin from the broader crypto market. One factor is the increasing diversification within the cryptocurrency ecosystem. As more projects and tokens emerge, investors have a wider array of options, leading to a potential redistribution of capital away from Bitcoin and into alternative cryptocurrencies. Market maturity and institutional adoption. The increasing maturity of the cryptocurrency market and the growing institutional adoption of digital assets could also be playing a role in Bitcoin's decoupling. As institutional investors enter the market, they bring with them different investment strategies and risk appetites. This influx of institutional capital diversifies the market and may lead to less reliance on Bitcoin as the primary indicator for the performance of the entire market. Unique characteristics of altcoins. Altcoins, or alternative cryptocurrencies, often possess unique characteristics and use cases that differentiate them from Bitcoin. These differences can contribute to a decoupling effect, as investors recognize the potential value and utility of these altcoins independently from Bitcoin's movements. Projects focusing on decentralized finance, DeFi, non-fungible tokens, NFTs, and other innovative applications are gaining traction and attracting their own dedicated investor base. Regulatory factors and market sentiment. Regulatory developments and market sentiment can significantly impact the correlation between Bitcoin and the broader crypto market. As governments and regulatory bodies around the world establish frameworks for cryptocurrencies, their actions can influence market dynamics and investor sentiment. Additionally, shifts in market sentiment, driven by macroeconomic factors or geopolitical events, may cause investors to reevaluate their investment strategies, leading to a divergence in the performance of Bitcoin and altcoins. Implications for investors. The decoupling of Bitcoin from the rest of the crypto market has significant implications for investors. It introduces the potential for diversification within their portfolios. Previously, altcoins were often viewed as leverage bets on Bitcoin's performance. However, with the decoupling, investors can explore alternative investment opportunities and potentially mitigate risk by spreading their capital across a wider range of cryptocurrencies. This diversification strategy allows investors to capture potential upside in specific altcoins that may be decoupling from Bitcoin's movements. Volatility and risk management. Bitcoin's dominance in the market has historically contributed to the overall volatility of the cryptocurrency market. However, as Bitcoin decouples, it may lead to a reduction in the overall volatility levels. Diversifying investments across different cryptocurrencies with independent performance patterns can potentially lower the risk associated with relying solely on Bitcoin's price movements. Investors should carefully consider their risk tolerance and implement appropriate risk management strategies when navigating the evolving crypto market. Increased attention to altcoins. As Bitcoin's dominance weakens, investors and market participants are likely to pay closer attention to altcoins. Previously overshadowed by Bitcoin, altcoins now have the opportunity to showcase their unique features, technologies, and use cases. This shift in focus may result in increased demand and investment in altcoins, potentially driving their individual prices and market capitalizations higher. Investors should conduct thorough research and due diligence to identify promising altcoin projects and assess their potential for growth independently of Bitcoin. Potential challenges and risks. While the decoupling of Bitcoin from the rest of the market presents new opportunities, it also comes with potential challenges and risks. The cryptocurrency market remains highly speculative and volatile, and investing in altcoins can be inherently riskier than investing in Bitcoin due to their smaller market capitalizations and potentially higher price volatility. Investors must be aware of the unique risks associated with altcoins, including liquidity concerns, regulatory uncertainties, and the potential for scams or fraudulent projects. Evolving market dynamics. The decoupling of Bitcoin from the broader crypto market highlights the ever-evolving nature of the cryptocurrency ecosystem. Market dynamics can shift rapidly, and trends observed in the past may not hold true in the future. As the market matures and new technologies and projects emerge, the correlation between Bitcoin and altcoins may continue to evolve. Investors and market participants must stay informed, adapt their strategies, and remain vigilant to effectively navigate this dynamic landscape. Conclusion. The decoupling of Bitcoin from the rest of the crypto market marks an important shift in the cryptocurrency ecosystem. While Bitcoin's performance has traditionally been a significant driver of market sentiment and altcoin movements, recent data suggests a weakening correlation. Factors such as diversification, market maturity, institutional adoption, altcoin characteristics, regulations, and market sentiment all contribute to this decoupling effect. Investors should consider diversifying their portfolios, assessing risk management strategies, and conducting thorough research on individual altcoins. The attention and potential opportunities presented by altcoins should be weighed against the inherent risks and challenges associated with investing in this rapidly evolving market. As the cryptocurrency landscape continues to evolve, it is essential for investors to remain adaptable, informed, and prepared to navigate the changing dynamics effectively. The decoupling of Bitcoin from the rest of the market signifies a maturing market that demands a nuanced approach to investment decision-making beyond traditional correlations.